Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is Ticker Request Live for Sunday, March 30th. Try to do these every week, Sundays at 9 p.m. Happy to take ticker requests, go over them live. And I do have work tomorrow in the morning, so I'm probably going to be trying to keep the stream to a length of about an hour. Sorry, I did start about 4 minutes late. But yeah, I'll try to go over as many tickers as possible in the meantime. And hey, Saul, what's up? I see it in the chat. Got QBTS and Applied Digital up there. So happy to go over those first. But first, cheers back to you. Happy Sunday. Hopefully you guys had a great weekend. I had a nice little fire last night. Just kind of took a night to slow the pace down and, pray to the stock gods and stuff like that. And yeah, I wish I had another day off because I could use it. But tomorrow's Monday. So yeah, and with that being said, happy Sunday. Cheers, guys. All right. And so, yeah, I'm just going to go over QBTS first because that is the first one that Saul has requested. And yeah, so I hid the drawings just because I thought it'd be a little bit cluttered just to start the stream that way. But I'll throw those back up here. And yeah, I mean, this retracement here is a little bit excessive. And what I was talking about over here, I guess, did not happen very clearly. I think I went over it a couple weeks ago, Sunday. Let's see, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Yeah, I'm not really sure when the last time I went over this was, but let's see, 13th. It might have been maybe during the, wait, let's see. Yeah, so this is a Monday up here. It might have been during a pre-market prep. I'm not really sure. But yeah, I was clearly wrong with that, so I'm going to delete that one. And maybe, hey, I mean, it's, I thought this would take until August. It's already happened pretty fast, up to $11.95. And so, yeah, let's just take a look at that. I'm just going to remove this big Fibonacci retracement because that's a little bit excessive in my view. And I'm going to delete that because that does not seem useful. And let's see, we did fill this gap here. So I'm going to, at least for the time being, make that line solid. And then just kind of consider the two tops over here. So this, forming higher highs. And with that, the RSI, it was forming lower highs. That was some bearish divergence there. About a week later, it gaps down, consolidates over here. So, that was a good signal to be paying attention to, even if, getting out the next day when that became kind of apparent with higher highs there in the stock price, lower highs here. Even getting out here would have been, at 927. That would have been a good move relative to, the months staying down here and even relative to the current price, which at close on Friday was 758. But currently now in the overnight trading, it's around $7.13. I can't pull up the chart for the overnight, but we can see the number there, 713, down about 6% overnight, following after that 6% down on Friday. And I'm a little bit tired, so it's probably going to become apparent. But yeah, okay, so some things that do stand out to me, just looking at the chart here, and, just considering that, yeah, I mean, I need to take a step back to kind of, was I suggesting that this would be like a head and shoulders, inverse head and shoulders? No, okay, well, there's just that downtrend, and, just thinking that we'd maybe consolidate below it before then breaking above it. But yeah, let's look at this. I am just going to delete that doodle because I don't think that's too useful. Something that does stand out to me as maybe there would be further downside, but a further downside move would not necessarily be a bad thing. And so what I'm going to suggest, I'm just going to do trend line based on the pivot point over here. And then I'm just going to kind of intersect it with the the open from February 21st. I could do it to the open or sorry, the high, I'm getting my words all mixed up. I could do it like that, and then that'd be suggesting price could be coming down to around 580 or so, maybe $6, somewhere around there. But I kind of like it, here, because it's just like, okay, it could, have some more downside. And so let's just keep an eye on that level. And I'm just going to make that thicker, and I'm going to make it green, because I think that if it does retrace to this downtrend, that would effectively be a buy level. And with that, I am going to make this blue line thinner because, while it was maybe important, since that gap has been filled, it's not really as important anymore, but maybe want to keep it up versus just making it thinner. And yeah, so what I'd like to do is then do a Fibonacci retracement from the low here up to the high there, 1195. It's possible those should be magnetized to the right levels. Yeah, so it looks good, but sometimes they're a little bit off. But so, yeah, I mean, I was talking about $6, and $6 seems, like the 786. So that seems like a pretty reasonable level to be prepared for a pullback to. And talking about this gap up here, there is still a gap to the downside. And let's see, yeah, that's going to be right here. So the close on March 13th was 691, so got that marked correctly. And since it's not filled, I'm going to make it a thick dashed blue line so we can kind of see that there. And 6 below it. But yeah, 731 is the 618, and we did wick to below that level. It looks like the low on Friday was 725, and in the overnight, trading below it at 713, as I had mentioned. And what I might do is just kind of like duplicate this green line, but have it to the pivot high here, just in case, so there are like kind of two levels that might be suggesting, where the bottom might be at. And so I'm just going to kind of intersect this with, the high from February 21st. And then this also intersects with the gap fill here and the closing price from March 13th. Yeah, so March 13th there, and this was February 21st. Okay. And so I'm just going to make that trend line thick, and I'm going to make it yellow. So that's kind of like cautionary dip buy. And maybe, I should make this Fibonacci orange. So it's like, 730 around current price, $7, let's say. That seems like, maybe that's a good level to, dip buy at. But I think this gap's probably going to get filled with a retrace to either this yellow downtrend, or worst case scenario as far as a pullback, but best case as far as a buying opportunity would be a retest of this green downtrend. And either level that we get to moving forward would correspond with a retest of the 786. So I'd really just look for like wicks down to either of these levels. Maybe that's coming down to like as low as $5. And we could kind of consider, let's see, a level going across here, just corresponding with the closing price from March 5th, 560. So, I think that is, kind of like a dip buy horizontal level to be considering, whether that coincides with this yellow downtrend or, it's not going to correspond with the green downtrend. So maybe I should make that, yellow. It's a little bit cautious. But yeah, so I could see this. I'll doodle it out. I'm probably going to be wrong, but I think this is probably going down to 6. Maybe a wick down, a flush, and then, it starts to go higher. So probably not going to be in a straight line or, doodle it out exactly like that. But that is kind of how I see that playing out. Yep. So dip to around 6 is what I would expect. And then if it breaks below 6, starts going lower, there is no, like V-shaped recovery here. Just, wick down, close above, and then it starts to go higher. Then maybe I would look for, I guess there are higher lows here. So before I move on to the next one, just going to draw a ray here from the pivot low, 371 from December 13th. And then I'm just going to intersect that with the open, I imagine, from March 4th. Did get one close below it over here. And yeah, I mean, so I think that this might take longer, or, you know, maybe there could be a little detour once it gets up to that gap. It goes back down to test that level and that uptrend, and then it goes higher. So that's another possibility for this. I probably like that one better just because these things take time. People lose patience, and then they lose money because of that. And so that's what I would say I like the best with QBTS. So hopefully that's helpful. And hey, Mr. Bagel Show, what's up? Is it time to buy Mullen? I'm going to answer that with a very simple no. It's never a time to buy Mullen. Yeah, down to 500,000 market cap. I'll pull it up just for fun, and then I'll get into Applied Digital. But yeah, I mean, I think that Mullen is just, yeah, this is, to be honest, I don't understand how it's still listed. Because, you know, all of these reverse splits, one for 25, one for 9, one for 100, one for 100, one for 60, 11 cents. And like a year ago, so the rule of thumb, I think Quodwo, this comes from Quodwo, was that if you look back in time 2 years, and if the stock price was more than $1,000, you want to stay away from it because they're just going to dilute you into oblivion. And so if we do, you know, I recently learned this. If I, oops, no, I screwed that up. I didn't want that. I recently learned this and then I screw it up. No, so what I'm going to do is, you know, I got this on the daily time frame. I'm going to go to this range and then I'm going to go to 1 year. And so this shows us the past year. And what we can see is that Mullen just a year ago, so not even 2 years ago, was trading at like 31,000, high here, million. Is that million? Nope, that's thousand. Yep, sorry, that's thousand. So all these zeros after the decimal there, and that's, yeah, so 47,000 was the high within the past year, which, you know, is pretty insane. So that was on May 8th of 2024. So yeah, and let's see what's going on over here. Yeah, I think if you buy it, this is, you know, when you buy it, this is what's going to happen. Red, 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 red. And it's going to keep going down. Maybe there's a reverse split or something coming that might cause a little bit of a spike. But yeah, I mean, with this, you know, from the open here, getting up to there, that's 100% swing. But then from there, if you held, you didn't get out, that's a loss of about 69%. And so I would say since it's a negative 69%, that's a bad omen. I think you should stay away from Mullen unless you want to lose money. Yeah, because I just think Mullen's a bad one. It's been consistently bad for a long time. And so let's see, Applied Digital. I'm going to remove my drawings for a second just so it's not so cluttered. And I think I did have an alert on this, so I'm just going to alert price is on. But what? Okay, I'm just going to create an alert here, arbitrary, 829. I don't want to have that alert there, but I just kind of wanted to see what my other alerts were, which I will probably turn off once I move on to the next ticker, just because this alert went off and it's like, I'm not going to get distracted with Applied Digital, don't have a position, and I have gotten distracted by too many stocks. So I'm just going to not worry about it. And so with that being said, you know, yeah, Applied Digital is trading. Where is this? What's this alert at? 750. It's well below 750 at 572. And let's see where this might be going. We do have lower highs in the stock price, lower highs in the RSI, so no bearish divergence. we do have lower lows in the stock price, even going back to over here. And that looks like this is a little bit higher than that in the RSI. So that's a little bit of bullish divergence. This is lower here. It's about flat. So that's like weak bullish divergence. So yeah, maybe there's some, dip buying opportunities. But maybe this could also be going down. It is down about 3% in the overnight trading at around $5.55, closed Friday at $5.72. And yeah, I mean, so very clearly, I think this doodle's playing out. My doodles are never perfect, but I don't know when I drew that, but I was expecting, it would get rejected from this light blue uptrend. That didn't happen. It went through it. Secondary was this yellow uptrend, went through that, and then got up to my little doodle here, and very clearly, got rejected there. I'm going to remove my doodles there, but that's a very clear rejection. That's, yeah. It's like you walk up to her, you open your mouth, and she just says no and walks away. That's what happened here. Clear rejection. Although maybe there's a bottoming signal here. I'm not so convinced of it because it is a red candle opening here, closing here, big wick down. So that does suggest that buyers are stepping in to kind of boost that up, but we don't really see that volume came in to boost that up. Maybe if we switch over to like the 10-minute time frame, we can see that as this was coming down, volume was up, and it looks like once volume died down, so this is all sellers, it seems like, just people, volume, dumping. And they got caught here, came down lower. Volume didn't really step in to buy that up, but towards the end of the day, Friday, did get a pretty nice candle here in the last 10 minutes of trading. It looks like that volume was, the highest volume traded for the day on the 10-minute time frame, and that was like 2.94 million shares traded there. So maybe that's some good news. There is like maybe a downtrend here, that it broke out from, but at a 10-minute time frame. So it's take it with a grain of salt. But yeah, let's get these doodles back up here and just try to think where this might be going. So yeah, I think that this inverse head and shoulders pattern, played out in the sense that if you're buying the base of the shoulder, buying the top of the inverted head, that, there was some nice upside to that. But there's a saying that there's nothing more bearish than a failed bullish move or pattern, and vice versa for failed bearish is very bullish. And so this was a bullish pattern, but it clearly failed, got rejected from the neckline, didn't really consolidate below. And so I would bet that this is probably going lower, and I am probably just going to delete my trend lines here because I think they're just going to be a little bit of clutter. Don't think that gap is really that necessary. And yeah, so, okay, and then I think, yeah, I'll just make these lines thinner, but I'll leave them up there because I think it's like a nice little legacy. But let's think about this. So, removing the doodles, removing the drawings, what is this? Downside move, consolidation, and then a clear rejection. So this was like a bear flag, kind of a steep angle, but bear flag. And so from that, we can take a Fibonacci time zone. I don't know what that is. I have not used that tool. But yeah, all my doodles pop up when I do this. So Fibonacci extension is what I want. And so I'm just going to go from the high 1248 down to this low here. It looks like 597 on March 10th. And then, got to click it. And then up to, the highs here. And so from that, we could get an idea of the 100% move, which is just going to be the distance from here to here, going from here to down below. And so we can see that level. That's going to be around $1.56. Surprisingly, my doodle supports that. So pretty crazy. But maybe that's not going to happen. Doesn't have to. I could adjust the Fibonacci extension to include like the 786, which would probably be around here, or maybe the 618, maybe around here. So it doesn't have to do that full 100% extension. It can go beyond that. It cannot go that far. It's just, kind of an idea of where this might be going. And so I have a feeling like maybe there's a trend line based on these lows that would suggest where the bottom might be. And I think current price might be around there, but I would feel a little bit safer, in all honesty, around $5. I think that'd be a better level. And yeah, I mean, this has been, forming higher lows for a while. And, just thinking maybe there's a notable uptrend going back further in time. So just looking at like the low from June 13th of 2022. I don't know if you remember that date. I remember it. I'm just kidding. But it looks like it was the all-time low for Applied Digital, or at least a very notable low. So I was thinking maybe connected to the lows over here. We're clearly below that. And then so thinking maybe connected with the lows here. This didn't get to there. So this is probably not the most useful trend line. Does correspond beautifully with my little bear flag there. But probably not so useful. So I'm just going to move this to the low over here. And then I'm going to move this one to the low over here. We can just zoom in on that to make sure those are at the appropriate pivot points. So 236, and over here, the low is 301. All right, so just make sure those are the right ones. 301, 336, that looks good. We're going to lock it in place just in case. And I'll make it a thick, I don't know, I'll probably make it a yellow line because that Fibonacci extension suggests it could probably go lower than this. Oh, I meant yellow and I did green. So, yeah, I mean, that would be getting to a price of around $4. So, yeah, and then, yeah, so I did that Fibonacci extension. And let's see, is there something that kind of corresponds with $4? I mean, really, it's like based on kind of my doodle of the head here. But there was a good amount of consolidation, Got this little channel there. I'm just going to delete it because it's not really important, but just kind of going off this low from over here from February 23rd. Not even looking at the price. It's 387.5 was the low from that day. And so that, I think, could be, I don't know, do I want to do it green or yellow or orange? Maybe I'll do orange. Yeah, because that's kind of at the bottom side, so that was support in the past. As you can see, stock price was consolidating above that level. I mean, if we look at the level here, 475, 450 is where the cursor is. So we got all that consolidation going across. But maybe I'll just do the wick high from March 21st of 2024. That is around... let's see, the high was 497.5. And so maybe that's the orange level is what I would say. And then this one here, I would have to correspond with yellow because it's actually below that uptrend. So getting into the sub $5 but above $4 range, I think that'd be dip buy level. And then this Fibonacci extension, that would be the green to say, hey, I'm throwing everything at this at around 150, which I'm not necessarily being serious about that because that would also be taking out the low from over here. So maybe that would be like, completely done. But that's like huge moves to the downside. So that's like, 70% move to the downside. So yeah, but I think at this point it's breaking down and going to between, I'm going to say, I think it will find a bottom around here. So kind of like making a little flag there. Somewhere in that range, that's where I think the bottom will be. So I'm just going to make that green. That's what I'd think. I think this is too bearish. And also, I guess if there's a break in trend, that would be this low over here at 301. Then you'd be putting in a lower low, so that breaks the trend. And so I would actually say that this is like the stop loss level, 301. And then maybe buy back at 156. And that's a 50% discount from 301. Yeah, so this is like nibble a little bit at 5, establish more of a position around 4, and then if it does break lower, down to 301. If it hits $3, then yeah, so I guess I'll put an alert here at $3, and that should be below, and I'm just going to delete these other ones, or maybe I want to have an above one. That would be like $8. I don't think that's going to happen, but that's kind of, like it'd be like retesting the highs over here, which if I do zoom into the chart, we can see 807 was the highs over here. So that's why I'd want to see if it gets above 8, then it's like signaling that my downside expectations are not happening. So yeah, hopefully helpful there. Mr. Bagel Show is saying he also likes Applied Digital. Also, Jim Cramer says, don't buy, so obviously buy more. Yeah, so, and that comes back to, when I was first talking about this, that maybe this is a reversal signal with that hammer candle down there. It's just there's not much volume that would suggest that buyers are really stepping in. So I don't know. Yeah, but if Jim Cramer just recently said that you should avoid it, then this is probably a bottom signal. And something I forget to do, I was leaving them up on all videos, but it just gets too cluttered. I'm trying to be less cluttered. Moving averages very clearly below all of them. I was thinking that maybe there was a moving average below here that would suggest the bottom is in. But yeah, I mean, the stock price is below now all of the moving averages. And the shorter time frame, the 21-day, just crossed below the 200-day. So that's maybe a little bit bearish, but I think that really just corresponds with this massive bearish moves that we've seen the past few days. And I will, before I forget, just flip over to QBTS with those moving averages to see that the 21-day is at 741. So price closed above that, but in the overnight is price closed above that, but is trading below it in the overnight. And yeah, so I mean, we got the 50-day moving average at like 661, and the 200-day moving average is all the way down here. I don't think it's going that low, but yeah, I mean, I do kind of like this retrace from that breakout and then start to move. So yeah, very nice there. And let's see, moving averages. I'll just hide those. And yeah, no problem, Saul. Glad it's helpful. And happy to go over some others if there are some other requests. I might just pull up Tesla. This is one that I've been adding to, also adding to TSLL, which I kind of knew I should have been, hedging a little bit with TSLQ, but I didn't. But yeah, I mean, this closed Friday at 263.55. After hours close at 260.12. Overnight, it's at like 252.80. So that's a pretty notable pullback. And so for me, I have less than 2 shares. I'm nearly at 2 shares. I just do 1/10 of a share a day, basically, either by trimming a little bit of my charge point to do that, or just by, cash on the side. But I just realized, I'd like to have more Tesla, not necessarily for a trade. That would be more TSLL, which I could have taken like 10% profit on, but I didn't want to settle. And maybe I should have done that before the weekend, but yeah, I got a lot of stuff up here. This trend line, maybe that's useful. Lots of clutter here. Too much. But yeah, I mean, really, that's just a lot of crap to the downside. What's that purple line? I don't know how useful that is. But yeah, I mean, really, like with this, what I think, I could do a retracement from here. I'm just going to do a retracement from here. Didn't get this bounce and continuation that I was hoping for. Looks like it's more of a breakdown. But I suspect that the news we get on Wednesday around tariffs, I think the market's kind of like pricing that in, panicking about that now. And then so once that news comes out, there will be a rally into the end of the week, is what I expect. Whether it's with Tesla, the S&P 500, a lot of stocks, that's kind of what I see happening. There's just a lot of panic now, is my impression. So I think there will be some dip buying opportunities the middle of the week. Yeah, let's just do a Fibonacci retracement here from a low of 217.02. And my average is now, I think, around 222, something like that. And yeah, I mean, 618, let's see. And then I also add the 50%. That's, right. I mean, currently trading below that now. But yeah, I mean, got this consolidation here. And so I want this to be, effectively, at the close from this day, the close on Pi Day, very special day. The close was 249.98. And so that's, yeah, I mean, I don't know. I'm not freaking out. I'm just happy to be able to hold more Tesla, whether it's for charging stations, EVs, batteries, solar panels, Optimus, robotaxis. I just think Tesla's a really good company to be investing in. And so, yeah, with all this clutter up here. And yeah, I mean, also too, getting back to this yellow trend line. So here, maybe I'm going to say that I don't want to make that thicker, but I'll make it green. And I'm going to reduce the number of levels there. Really, I'm just thinking the 618 is one that I like. It's just to kind of reduce that clutter around 245. And yeah, and so by the time it hits that level, I suspect I will have 2 or more shares, which I'll be excited about. And if it goes lower, if I'm red for a little while, that's fine too. I don't care. I bought over here. That's kind of funny. Yeah, like the low was, no, I didn't buy over here. I bought over here on August 5th. The low was 182. I bought 1 share at 185, and I held all throughout this. I only had 1 share. I didn't want to sell my share because I had Palantir. I sold my share, sold my shares. Maybe I think I had multiple. I was trimming on the way up, and I don't want that to be with Tesla. And so I was up 168%, and now I'm, oops. Is that locked? Yeah, okay. That line got screwed up a little bit. That yellow line, whatever it is. I guess that's corresponding with this level there. I'm going to, just too much clutter. I'm going to delete that. That gap did not get filled. That's cool. But yeah, I mean, I was up 168%. Now I would be up like 44%, but my average is around here. So I'm up 17% or so, around 20%. But yeah, it is what it is. I'm happy to be adding and to be holding. So yeah, and one thing I screwed up with the little bar over here. This thing gets offset from my camera, so just lining that up there. But yeah, if there are other requests, I could maybe go over some other ones that I'm interested in. I meant to do more videos this weekend, but I just kind of lost energy. Yeah, I don't know. Let's see. Yeah, if there are other requests, I can look at those. Maybe I'll take a peek over at X to see if there's some stuff going on there. Maybe there are some good ideas we could get from people over there. And so let's see, 170 for Elon Musk. All of the legacy media and news, social media, we're in lockstep together. And news, social media were in lockstep together, and they were all parroting the same left-wing talking points. That's one of the things that I find really crazy is the parroting. How it doesn't, like, I mean, I think this was actually pointed out on John Oliver's Last Week Tonight, and he, happens to really very much dislike Elon Musk as far as I understand. And yeah, I mean, he did a coverage on how news outlets would all be saying like the exact same thing, and so that's a problem. Whether it's because of state funding or if it's because of private interest, that's not good. Hey Benjamin, what's up? Yeah, just poking over at X because I wasn't getting too many requests, but I'm happy to go over a chart if you'd like. Just reading what's over here. So Elon continues in this quote. Let's see. And they were shutting down all right-wing or even centrist views. That's why I thought it was critical to acquire X to enable that dialogue. It's a step in the right direction, and we showed that once X was willing to break ranks and not censor Republicans. We're seeing others start to move in that direction. We see Facebook/Meta saying that they'll be copying, I think it's funny, the word copying, community notes from X rather than having the woke Stasi censoring thing. I'm hopeful that things are moving in the right direction. Yeah. So I'm hopeful too. Just not necessarily affiliated with a party or anything, just as far as clear talking about stuff. Let's see. And I'm just gonna, this is March 27th. I'm just gonna write, oh no, they will never win again. And then I'll do upside down. Oops, Dwan. All right. What's going on here? Evolution. Okay, I'm going to get back to the charts. And so FLNC, thought you might request that one. It seems to be, and so what you're saying is FLNC seems to be forming a downward wedge pattern based on Fibonacci analysis. Where do you see FLNC finding a bottom? So let's take a look at that. Ooh. So this is pretty steep. Okay, so there was the low over here from the 13th. The low was 497, and it hit a low on Friday of 495.5. So I think that's, I mean, what could happen is, kind of like I have it over here. It just shifted a little bit, but, a drop down here and then a bounce to retest that. And then if it gets rejected there, then it's like, okay, it's going lower. And so, okay, yeah. So what I would say is, and this is something that, to be honest, I've been seeing in a lot of charts. And I think that we might be in like an interim bear market before we see a rally towards the end of the year. That kind of matches my thesis with Bitcoin in the 4-year cycle. And that's really like having an influence on how I look at stock charts and stuff like that. But I feel like we're just seeing kind of the beginning of a bear market, basically, that might take us into halfway point of the year. But then from there, we see a rally into the end of the year, and that would correspond with Bitcoin hitting all-time highs and stuff like that. And so that would make sense as far as like the 4-year cycle goes. But, what I've been seeing, which has not been discouraging me too much, is patterns like this where it's downside and then consolidation. So that's forming a bear flag. And so this stock's that looked like this, probably going lower. But I think that really it's going lower to, not necessarily with this stock, I don't know, but just generally that I think they will be going lower to dip buying levels before we see a rally into the end of the year. But then following that, it's kind of unknown. But I think like the Trump administration would like to see the stock market doing well for the midterms, because I think that the Republicans probably want to remain in power and that the Democrats really want to reclaim some power. And so I guess in a sense, there's incentive for the Democrats to want the stock market to perform poorly now. And because then if it's performing poorly, then it's like, well, we got to change things up and get some more Democrats in charge. And so, yeah, I think that the pain that we're seeing now in the markets, or will be seeing in the weeks or months ahead, I think that's all really just kind of like, is it Scott Bessent? I really like him a lot. I feel like he's trying to kind of engineer a controlled recession so that things can then continue to go higher rather than a recession happening and then having to deal with it. So I think that he's trying to basically engineer whatever correction is needed in the markets so that a bottom can be formed and then they can continue higher in a more healthy manner. But yeah, so looking at this, the Fibonacci extension that I would probably do is just going to be from the top here. So that's at 778. That was hit on February 21st. And then I pulled that down to the low here from March 4th, which was 478.5. And then I just go up to the highest high that we saw following that, which was just a few days later on March 7th. And so from that, we could get the distance from here down to here, but measured from here. And so that would suggest 100% retracement. So just that distance here from here, a price of around 288.5 or around $3. And is there anything in the past that might suggest? Nope, there's nothing in the past that I could really refer to with that. And so, and also too, there's a lot of hope here. Trading the bottom of this channel, it's like up 60% there, up 70% there. This had a lot of great opportunities for swinging it. But yeah, with this gap down, I would just think that, okay, and also, this line has been taken out, 497. So I think that's risky. I would think that a bounce, and then if it gets rejected, that's kind of like a cut losses on that bounce, in my view. I feel like this is probably going lower. But if it does bounce, that's great. But if it does, hit this level here, 478.5, I feel like then it's just going to be going lower and lower and lower because, like if we look at, like was the 52-week low, 52-week low, 478.5 just recently hit. But then we look back in time, and this doesn't really go too far back in time, so it's kind of easy. So it's like this low over here, 496. So let's just take a look at that line, that level as an example. And I'll make this light blue because I like that color. And so, that was the all-time low. Got a V-shaped recovery there, so very quick, hit it and then bounce. So that looked very good. But now that we have taken out that level, or I guess we've revisited it, actually crazy. The 52-week low, 478.5. That's actually kind of crazy because maybe there's a double bottom possibility around there. So that level is right there. So yeah, maybe there's some hope. in my view. Maybe there's some hope that it could be forming a double bottom, but it has, pierced the level here. This did form, let's see, lower highs here, whereas the RSI was forming higher highs throughout this, although this was a lower high. But that was, bearish divergence, tops, lower highs, tops in the RSI, higher highs. So that's bearish divergence. Now what we're seeing is still, let's see, this is a lower low, this is higher low. So maybe there's some bullish divergence, but I think it's not very notable at this point. But yeah, I mean, that effectively, this is corresponding with a double bottom. But like I had pointed out, that was a V-shaped recovery. This is not a V-shaped recovery. This is a consolidation there following the downside moves. So that seems like it's more of a bear flag than a double bottom. But yeah, and so anyways, with the point, I was trying to make the point with that light blue line, what happened when we, hit new lows. And so we can just look at that going back in time. That level that I am referring to, that was from 2022, so that was not included in the 52-week lows. And so in order to look at the 52-week lows, what I can do is I'm just going to go here, and then I'm going to go to year. And so this shows us the time frame the past year. And so over the past year, this was like, the 52-week low, or, any of these levels, 52-week low. So let's say this is the 52-week low. Let's see. Because at this point in time, that would not be the 52-week low. So at that point in time, this level would be the 52-week low. At, let's see, 1303, pierced it. But when that was pierced, what did we see? We saw a V-shaped recovery. So that looked good. That looked like a bounce. And then what happened the last time we hit those lows, the 52-week lows, which were not all-time lows at the time, but for 52 weeks they were. Once it hit the lows over here, it just continued to hit lower lows. And so I think that it's like, like what happens when something hits an all-time high, it tends to just continue hitting all-time highs. It just keeps going up. And so with this being at, the all-time lows, it seems possible that it could just continue rolling over. So, but there is possibility. So really, like, if this doesn't close the end of the week, so what's the end of the week? That's the 4th right here. If on the 4th, I'm just going to put a note here. And so let's do a little. If no V-shaped recovery and closing week below for 96, about, what's that red line at? It's a little bit above, so like, I'll just say 496. If it's closing below 496, then likely continuing down. So that's kind of my perspective on it. So on the 4th, so next time I look at the chart, if that's next ticker request live, if there's no V-shaped recovery by that point, then it's just it's just going to go down in my view. And so cutting losses to then buy back lower or looking at another position, that's what I would probably want to be doing with this, because otherwise it's just taking up time. It's eating away time, and time's valuable. So yeah, hopefully that's helpful. I know it's not the best outlook, but it's yeah, and I guess it's like kind of good that volume's low. that it's just hanging out here, but eventually people are just either going to get antsy because it's like forming a bear flag, and then they're just going to, it's taken up too much time. I want to be, making money, not just sitting in a stock. People are going to start taking money out, and then it's going to come down, because it's not just going to consolidate and then people are going to be like, oh, okay, well, it's consolidated for long enough. Now I'm going to start putting money in. And people are going to get bored and they're going to start taking money out, is my view. Yeah, no problem, Benjamin. Hopefully it's helpful. Hopefully, it's trading up here around 536 by the end of the week. But then again, it could be, getting rejected from that uptrend. So, but yeah, I mean, at this point though, since it's been hanging around that level for so long, it really needs to see a bounce. But I mean, this could also be a fake out, because, maybe people are seeing, oh, well, there's this uptrend. It's putting in higher lows. Once it breaks this low, then it's no longer, it's still putting in higher lows relative to this one. So yeah, I mean, maybe this is like the level that should be read. And this level over here should be cautious. But yeah, if it does get up to around 588, then yeah, then I think it's got potential to go up here. So yeah, and let's see. I might flip over to Bitcoin. Bitcoin is one I don't really trade much. I really just accumulate. But I'm thinking about doing some, I guess, arbitrage using, what's it called? Arch Public via Gemini. I just created a Gemini account, and I'm thinking about doing that. But I'm also just, this is on the hourly time frame. I had an order placed at 81,500. I'm going to see if that got filled. And that is for the play of the CME gap. So Friday close at, 5 p.m. Eastern was, forming the CME gap. And then, it did go above it a little bit, but, the CME gap is based on Friday close and then wherever it's at come Monday morning when the market opens. And so, yeah, this is just for like a quick swing trade. My phone and my computer always want to update, and it's so annoying. So let's see. Man, my order did not get filled. Yeah, so I'm doing it with Robinhood. And I had a limit order placed at 81.22. And it did not get filled. 81,500. And it did not get filled. Dang it. Maybe it gets filled overnight, though. And then if it does, then, the spreads in Robinhood aren't that great. So it would basically be like, I'd want to get it up to so I'll move this over to here. So I haven't had my order filled, may not get filled, but that would be just like 81,500 and then to like 83,500. And that's a 2.45% move, so nothing too crazy. And in case it does go lower than that level, I just put a $50 limit buy at 81,500. And then if it goes lower, basically daily, then I just be able to add $50 more. And then I just take profits up here. So, let's say it's a 2% swing. So on $50, that's $1. So it's not really a lot of money, but, turning $50 into $51, it's not nothing. And I do daily DCAs of some altcoins, just $1 a day. So, that's a free daily DCA. So it's not too bad. But yeah, I'm just trying to get more used to keeping an eye on the CME gaps, because I think that could just be like a really nice way to make a little bit of money every week. And as I get more familiar with them, up that 50 to 100, maybe to 1,000 in a couple months or so. And then that'd be making, $10 over the course of a week, which again is not that much. Well, from 1,000, that'd be 22%, that's $20. So it's not nothing, but it's also nothing too crazy. And then also, I'd be doing that with like, well, if it does just completely break down or something, then it's like, okay, well, that's fine. I can just go into my long-term holdings. That's fine. Not a big deal. And so Benjamin's saying regarding, I believe, FLNC, this analysis was not only helpful for this specific stock, but also for other future positions and other stocks, since technical analysis is universal. Yeah, for sure. And that's like one of the things, like I don't always do everybody's favorite stocks, whether it's from requests, usually I try to, or from videos. But really, I mean, it's just helpful to be going over this stuff. And one thing I've been trying to get better at is just like reducing the number of levels that I have on the charts. And so, like I go over this stuff every day, like Bitcoin every day for pre-market prep. And I mean, there is kind of a little bit of clutter on this, but it's not super bad. I just have this one main, Fibonacci retracement. And oh my gosh, I have limit buys for just $10 worth of Bitcoin at 75K and 72K. Just thinking about, the prior highs here being around 74. And people are like, oh, well, I'll buy when it gets back to those highs. That'll be support. But maybe it doesn't go all the way down there. So, or maybe my order doesn't get filled because of the spread. And so I just have a limit buy at 75. And then if it comes down to the 618, limit buy at 72. And then just getting into the shaded region and just having fun with the numbers, $69,420. I would then go notably heavier with a Bitcoin buy, maybe just do like a one-time $1,000 buy. And that's, I'm thinking about that as retirement. And that also, I mean, I should think about that as, well, that might be like retirement, but if I'm trying to save up enough money to have 6 months of bills in savings, and then quit my job, focus on trading, and just kind of trying to dial that in better. I'm trying to do it, but I think that it's tough when it's like I'm not spending all the time on it, like it's not my daily routine. But anyways, if my goal is to just be working for myself, spending $1,000 on Bitcoin for retirement, that's only going to postpone when I could, just start to work for myself. So maybe that's something for me to consider, but I just have more conviction in Bitcoin than I do in, something like Dogecoin. Even though I do have a lot of conviction in that, I think Bitcoin's a little bit risky, or Doge is a little bit more risky. But also, I mean, if Bitcoin is coming down to here around 69,420, maybe I also want to buy some ETH, because I've been daily DCAing that $10 a day. And let's just look at the ETH chart real quick, which is super boring. It's like notorious for being boring. But yeah, it looks like we're getting kind of a breakdown of this trend line. And that's not necessarily that bad, because I have this other trend line down here, 1,500. I could see it going down to there. And then I think that would be like the, oh my gosh, throw everything at it moment. And yeah, because I feel like, I don't know if you guys experience this, but it's always like, oh, there's a dip, I should buy it, but I don't have any cash right now. And then it's like when I have cash, it's like things are rallying. So I think what I got to do is just, okay, I got cash now. I did just get paid on Friday, but I had to pay a bunch of bills, so I don't have too much cash for the next couple of weeks. But it's like, well, I mean, I think that things could be coming down a little bit more, but then I think that would be like a historic time to buy. And so, then I want to have cash for that historic moment, not for this little dip here, $10 a day. And with $10 a day, I think I'll be able to accumulate an entire Ethereum. And so that would be cool. I used to hold multiple Ethereum, but man, that's the trouble with crypto. I feel like it takes a couple cycles to learn how to hold the bag long term, learn how to not take profits at or just above break even, because let's say break even's over here and it's like, price just got up to break even, and it's like breath of fresh air. But then from that you know, trim, you know, so you trimmed over here, you're missing out on, you know, 100% gain, 2x. So yeah, I mean, I'm just trying to accumulate crypto, kind of thinking about it for the long term, but you know, between May and December, I think that we'll be seeing all-time highs in these. So I'm excited about that. But yeah, and it looks like I have been streaming for just about an hour. It's a few minutes after the hour. And with that being said, you know, before I get any last minute requests, I might close down the stream just because I got work early in the morning, and it'd be nice to start the week not so stressed, start the day with a pre-market prep, and then have enough energy in the evening to put out another video. So yeah, I think I'm going to wind this down. Yeah, I mean, you know, as always, those are just my thoughts. And if you did find them helpful, please make sure you like the video, like the stream, and subscribe to the channel. I try to do ticker requests live every Sunday at 9 p.m. Oftentimes I do the stream for about 2 hours. It's just that I got work tomorrow, so in the morning. And so, yeah, I'm going to close this down. But yeah, I'll be doing another pre-market prep in the morning. And yeah, I look forward